Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
All right, welcome to Kiss My Assets podcast. This is where we dive into the details about multifamily investing. We love assets that are tangible, that you can drive by, that you can see, that you can touch. And we also love cash flow and passive income, which is what creates ultimate financial freedom.
That's my favorite part.
And I'm the host, Jamison Manwaring. I'm also the CEO and co-founder of Neighborhood Ventures. Neighborhood Ventures is a real estate crowdfunding platform that enables everyone to grow their wealth through multifamily investing with as little as $1,000. And joining me today is Heather Andrews, who leads investor relations at Neighborhood Ventures. So hi, Heather, and welcome.
Hi.
Hi.
I'm back again. You cannot get rid of me.
You're back, and we're excited to have you back. And I just want to kind of level set where we are now as of early September, late August, early September, with the markets. So as of Sunday, the NASDAQ, which is primarily tech stocks, so far year to date is down 22%. The S&P 500 is down 15% year to date. The Dow is down 11%. And then if you look at cryptocurrencies, Bitcoin is down 57% year to date, now just barely over 20,000 per Bitcoin. And Ethereum is down 60% year to date, under 1,500. So just want to do a little snapshot of where we are now that we are approaching the end of summer officially as Labor Day comes and we're starting September. Folks are going back to school and now we don't have COVID. Things are getting very normal again. So it's been a very interesting year. I remember having a conversation with one of our bigger investors who had quite a bit of money in the stock market, and they were looking at putting a big investment in commercial real estate with us early in the year. This was, last December, so they were looking at doing that in the first of the year. And, I used to cover stocks as an equity analyst, so I would cover single stocks and would make recommendations whether you should buy, sell, or hold. And I don't do that anymore, but I did that for several years after college. And my feeling was, with all of the run-up in stocks at the end of last year, that it might be a rough year for stocks. So sometimes you get it right, sometimes you get it wrong. In that case, and in the case of myself, I didn't have any money in the market, and I'm glad that I didn't, because we saw a huge run up over a couple year period in 2020 and 2021, and then this year there's been a big correction. So I'm glad I haven't been in the market. That particular investor, they did invest some with us. They kept a lot in the market, and you can never predict this perfectly, right? But that's one thing I would say. If you say, okay, what did we say was right? What did we say was wrong? That was one thing. As we got to the end of last year, now we're into the year, and those assets have come down quite a bit.
Well, enough that you feel a little bad for him. I do feel a little bad for him. I mean, I don't feel bad for us. I don't feel bad for multifamily.
Yeah, well, you would feel bad, except that it was also 2 years of run-up.
So they had their time.
So yeah, if you look relative to what the run-up was, that puts it into context. But you can never always be right. But, as we're sitting here, the markets have come down quite a bit. On the other side of it, Neighborhood Ventures has paid a 12% preferred return through the year. That's not changing. That continues to be the steady stream of income, the steady stream of an asset. And typically that's what commercial real estate can do. Maybe it's a time to buy, and that's kind of a debate we've had in our office. Maybe it's a time to buy stocks, maybe it's not. But that's just where we are. And then I also, we have several things that are happening in the news right now, and we specifically talk about multifamily, and even more specifically some of the things that are happening in the Arizona and Phoenix markets, because that's where most of our projects are. So one of the exciting things that's happening in Central Phoenix, Central Phoenix is one of the areas that in the last 20 years has really changed. It's become a place where people want to go.
Yeah.
Before this happened, 20 years ago in the 90s, everyone kind of abandoned the central part of Phoenix, and they moved out to the suburbs. They moved to Scottsdale. They moved to Mesa. They moved to Gilbert. They moved to Glendale, Peoria, Surprise, Avondale.
North Phoenix.
Yeah, north as well. And the central part of Phoenix was kind of left as not a place you really wanted to go.
Oh, I grew up here, and we were told not to go.
Yeah.
That was not for us.
Yeah. There was some safety issues.
Yes.
There was also just kind of a lack of things to draw you there.
No, just a lot of buildings, empty buildings or office buildings.
So around the late 90s, one of the catalysts that really helped change that was Banquet Ballpark that came to downtown. The Suns built a new arena, America West Arena at the time, that started driving people more downtown, and it would give people a reason to go downtown. And then once you start getting that traffic, then there was some other things that started sprouting up. Restaurants, the Phoenix Convention Center added on. So downtown has become more vibrant. It's still not as vibrant as some of the downtowns when it comes to nightlife, when it comes to activities, but it's definitely on the way. And one of the cool announcements that that's happened the last few weeks is a couple of big projects in Central Phoenix. The first one is, and we'll show you this on the screen, is the Phoenix Financial Center. This is on Osborne and Central. Go ahead. What were you saying?
No,
Okay.
I love this because it's I think a beautiful building. It's a piece of history.
Yep.
And they're not going to change the facade or the things that make it really special.
Yeah, so this is kind of a funky building. Yeah. Arizona had a boom in the late 60s and 70s with buildings. And so when you drive around and you see some of these buildings, they kind of have this funky 70s architecture. This one was built in 1964, the Phoenix Financial Center. It's like 20 stories in Midtown. You have, downtown there's some buildings, some high rises, and then there's kind of a gap, and then Midtown there's another set of high rises, and this is around that Osborne and Central area. And a great announcement that they're going to come in and renovate the building, and they're going to also add a new 7-story Class A multifamily in the on the same plat as that Phoenix Financial Center. They're keeping the Phoenix Financial Center intact. Yep. They're going to upgrade it, maybe add some retail. Right now, it's just an office, and it's kind of been in a weird state because there's not a lot going on there pedestrian-wise. Right. And that's one of the things that needs to change to make some of these neighborhoods more vibrant, is having some street-level retail, some street-level activities. And so that was one thing that I think was exciting to see. And you like the architecture.
I do. I love that. I think anything that gives some personality, because I think Phoenix did go through a period where everything was very much the same kind of adobe or stucco. And now keeping some history and some interest, makes us a little more exciting, like some of the other cities.
Yeah, it's our vibe. Yeah. That some of the coolest buildings we have come from that era. Yeah. And because we did see a boom around then when they built a lot, and they are unique. And so it's exciting they're keeping it, but revamping it. Up the street a little bit further north, there is a new project that kind of is modeled after what happened in Scottsdale with the Scottsdale waterfront, the canal. So we have some really vibrant canals throughout Phoenix. It's one of the things that if you go back in the history of Phoenix, we've had these canals actually since before it was settled by Westerners from the original native folks who lived here had this canal system. Yep. Obviously, we're in the desert, so
we need water.
We need the water organization. So they came in. They had this really elaborate canal system to send water throughout the valley, and then we have continued to develop that as there's been more building and more construction, and now there's some the canals are throughout the valley, and we've kind of taken after the San Antonio model, where San Antonio, Texas, if you go there on a Saturday, everyone's in the canal, floating down the rivers throughout the city, and it's a big draw. And what first happened in Tempe Town Lake, where we made that kind of a reservoir, and now on both sides of the lake, it's become a really booming area. Because in the desert, we need the water. We want the water,
and we're excited to see water.
Yes, at any time.
And the canals, I think, growing up, there was very much you stayed away. They were fenced off, and to reimagine something or repurpose it to be something beautiful and like useful is always exciting.
Yeah, love it.
Yes.
So we take something that initially was just for function,
Yep.
and we say, how do we make this a cool feature
Yes.
in a place like Arizona where there is no water, natural
Yeah.
water?
Yeah.
The rivers are all dried up unless it's rained the night before. So these canal systems they followed Tempe. Then Scottsdale built a really cool area that's called Scottsdale Waterfront.
Mm-hmm.
There's really nice luxury condo tower on it. Scottsdale Fashion Square is on one side, Old Town Scottsdale's on the other side, and it's really become this great gathering place in Old Town Scottsdale. So back to Central Phoenix, this is the kind of thing we need more in Central Phoenix. And this project was announced. It's going to be a development with multifamily, and then on the ground floor level, cafes, retail, restaurants on the canal around the Still Indian School Park area, which has a lot of potential.
Yes. Potential. I love that word.
Yeah,
Yes.
it needs some investment, it needs some creativity, but it definitely has some potential. So this particular project, they're going to build 150 luxury multifamily. They'll have the ground floor retail, and this quote I think was good from the city. The city said that the space is ideally suited for a cafe, bistro, or coffee shop and provides a first-of-its-kind amenity for patrons of the Grand Canal Trail to stop for refreshment, a bite to eat in the shade of the canopies extending off the southern face of the building. Because right now in Phoenix, this doesn't exist. The canals are just kind of there. There's not a gathering place. And then they also say it's the kind of development that needs to occur along the central corridor if Phoenix is to become a more walkable, less vehicle-dependent city.
And that's my favorite part. And I think this is the building as well, that they're having some combination live workspaces. And I just like the idea that the residents there, when you live there, you work there, you're spending your money, it's going to your neighbors, you're investing in your community, and everyone's able to take more ownership. It's only going to bring up the value. It's only going to be a better living experience, that they are really looking for ways to build a community there and keep people there longer.
Yeah, and I live on Central and Thomas, and I want that area to be cool. I live in an old home built in 1925, and in the area that I live in, there's been a lot of reinvestment in the homes, but there's not been a lot of reinvestment in the parks, in the community areas. You'll see some restaurants popping up, which is great, but there needs to be a concerted effort to make, the parks cool. For example, I've told the story taking my dog to the dog park at Still Indian School Park, and there's no lights. All the lights are broken. The park is all dirt.
And that's when you go home.
And that's when you go home and you never go back.
Yeah.
When I lived in South Scottsdale, I took my dog to the dog park, and it's a whole scene. There's 200 people there with their dogs.
Yeah.
Bright lights, really nice manicured lawns, right? And so for these urban areas like Central Phoenix to really become a destination, the city and private sector need to come together on some more of these projects. So I think it's a great idea.
And I think this is what drives the city and to improve these areas. When you have people moving in, this is where I live, this is where I work, it's where I spend my money, and they're getting involved in their community with the city, saying we want to come out, fix this, upgrade what we need to do.
Yeah. I hope that project goes well. There is also a project planned for Still Indian School Park on Indian School and Central, and there's a plat of land there on the corner that they're going to do some towers there. So there's some cool things happening in the Central corridor. If you drive down Central right now, there's a lot of apartment buildings going up in there. 7 stories, 8 stories. And that kind of leads us to next topic. So single family, the article from Globus.com, single family homes affordability dilemma leads to more renters. So we know that with the run up in the cost of buying a home,
it's a little bit high right now.
It's driven up the cost to acquire it, and then also the cost to pay the monthly payment. And we know that when that happens, more people decide to rent. Mm-hmm. Either they need to save some money for a little while, and once they get some money to put as a down payment, they'll make that move. But until then, they're going to stay pat. And, we also know there's kind of a stare down going on between buyers and sellers, because sellers are saying, I'm going to sell for this price, and if I can't sell, I'm not going to.
Right.
And buyers are kind of saying, well, I might wait a little while to see if prices come down. Yeah. So there's kind of this standoff, as some people call it. So this article is quoting CoStar, which does a bunch of analytics around renting. And it says multifamily demand has benefited from this uncertainty, as households that would have made the transition from renting to owning have been able to find a home to purchase, and now they may not qualify. Additionally, some other renter households are afraid to commit to buying for fear of buying at the top of the market. Overall, housing uncertainty creates a positive for multifamily demand in the short run. And yeah, go ahead.
No, I think that's a great thing where they're like, we can wait. I don't want to. I want a good deal. I'm not going to buy when everything's so high. I can wait. And when they look to multifamily, there's really wonderful multifamily properties that are being built and available. Where I think one of the biggest kind of increase, or what they're showing is is a renewal of multifamily leases. That not only are people moving into apartments, they're wanting to stay.
Yeah, they're staying longer than they ever have before.
Yeah.
So the renewals, when your lease comes up after a year, 6 months, people are saying, we're good. We're going to stay. The average effective rental rate in the U.S. year over year on average went up 17% in a year. So if you kind of think about inflation, the numbers were around 9% this last quarter, 17% increase in people's rents in a year. But it's still a much lesser cost option than buying a home. And they talk about the affordability gap. So there's always a gap in costs between buying a home and renting. If there was no gap, people would just decide to buy a home. If you're spending $2,000 on rent and you can buy a home and your payment's $1,500, you're going to buy the home. But it's not that way. It's the opposite. So if you buy a home, it's going to cost you more in most markets, not every market, but certainly in the big markets. It's more like if you buy a home, you're going to have to pay $2,000. If you rent something somewhat equivalent, it's more like $1,500. So let's talk about the affordability gap. Right now, the average monthly mortgage payment, and so the affordability gap is the average monthly payment to rent versus to buy. Before the pandemic, that affordability gap between buying and renting was $280. At the end of 2020, it was $375.
It's a big jump.
So it's gone up. Right now, halfway through 2022, the gap is $1,000 between buying and renting. So again, we started at $280, it went up to $375, and now it's $1,000 different nationwide between buying and renting.
You must need a moment of silence for that kind of increase, just to absorb it.
Yeah, that's a lot of money.
Yeah, it is.
If the average income is around $55,000. Yep. After tax, $1,000 a month or $12,000 a year is a big deal that you can save by renting right now on average. What folks are doing is they're saying that as far as affording a home right now, you have to make $100,000 on average to be able to afford to buy a home. So a lot of folks aren't quite there yet. If you are early in your career, if you're a few years into your career, making $100,000 is no joke. And that's really what you need to make in order to be able to afford to buy a home. One of the other dynamics of this are the people who own apartments, as you said, are seeing that residents who are living in apartments want to stay there a little longer.
Yes. I think they're finding that multifamily is closer to things they want to be near. They're more and more of the multifamily apartments are having amenities that people want, where there's workspaces, there's outdoor areas. They don't have to maintain those, which in a home that costs money and time. That it's just a better kind of quality of life they're finding closer to things they want to be next to.
And that's what this Peter Marte of Panga Real Estate in Chicago, he said, our residents appreciate the flexibility associated with the rental lifestyle as many navigate job changes and hybrid work schedules coming out of the pandemic. So renting makes a lot of sense right now for a lot of people. And that's where, multifamily continues to be a nice asset in that way. Transitioning to some of the effects of that. So we know that multifamily, there's a lot of demand for multifamily. And if you look at specifically in Phoenix, new research coming out of Collier's Real Estate, Thomas Brophy over there, who's a friend of mine who leads their research team.
I think I follow his Twitter.
Yeah.
Yeah. Good guy.
Yeah, follow him, and a lot of interesting stuff he puts out. Says that Phoenix continues to run a deficit in multifamily housing, and right now that deficit sits at about 20,000 units.
I think we're 8th in the nation with a housing deficit. So we need housing.
Yes, we need housing, and we have in any given year. So just to kind of put into context, this year Arizona is bringing about, according to different resources, some say around 22,000 units. Others say around 16,000 new units will come on the market. So these are newly built units that are going to be added. So when you drive around and you see these apartment buildings going up, depending on the area you live, you'll see a lot of that. I see a lot of that in Central Phoenix. So there's about between 16 and 25,000 coming on the market. Even with that happening, we're still at 20,000 deficit, which is about a year. Meaning, at the pace that we are going, if we continue to build that many next year and the years after, we're still going to be in a deficit based on the people who move here.
Because we have, I think it's something like 200 people a day moving here. We have a huge influx. We have job growth here is huge. And so people are coming. They need somewhere to live. And so there's not really a worry of like oversaturation.
Yeah, that's right. And right now, because to meet that demand, apartment construction is at a 50-year high. So this is an article that you can see. You can see the map on the screen here. If you're listening to the podcast, you won't see it. If you go to YouTube, you can see it. But Phoenix is currently the 6th busiest market when it comes to building new multifamily. So number 1 so far this year is actually New York City, which is kind of funny. But New York has a huge market. It hasn't been in the top 5 for quite a while, but it's actually the number 1 market according to this report from Yardi. Number 2 is Dallas. 3 is Miami, 4 is Houston, 4 is Austin, 5 is Houston, and number 6 is Phoenix. So we're on a good pace to add additional multifamily, but these are all markets where people are continuing to move. Yeah. Obviously, New York always needs more housing. The costs there are so expensive. The rest remain kind of in the Sun Belt area. And one of the things that we see in Phoenix specifically is that similar to what Neighborhood Ventures did at Country Club, where we converted a hotel that had kitchens into apartments. This is an article from Phoenix Business Journal, developers turning outdated commercial buildings into more Phoenix housing. And it makes a lot of sense to do that with hotels. But what we're seeing more of is office space that were previously rented to big companies or who would rent a whole entire floor and have 50 or 100 people working there. They're sitting there empty.
Right.
And at the same time, we need this space we need more housing.
And I'd rather see a building reused and repurposed than torn down.
Yeah,
it's
that's
obviously
exactly
better
right.
for the environment and for,
Now, sometimes it makes sense.
Yes.
If you can make it make sense to do that, that's awesome. Sometimes it doesn't make sense to take an old building that has a lot of problems. Sometimes it's better to go right to dirt, but it depends on the property. This particular trend that's happening in Phoenix, one example of that is this office building that's on the corner of 31st and Northern at 31st Ave and Northern. They're going to convert it to a 38-unit multifamily complex. Right now, it's just been an office, and it has to go through a rezoning process with the city. But the developer, this is what he said: these forgotten office properties provide an on-ramp for our company to compete in a crowded space of multifamily. So what this guy is saying is that the Phoenix market has a swath of underutilized vintage office product from the 70s, 80s, 90s, and the existing infrastructure provide cost savings and as an attempt to solve our state's housing crisis. So they have to get it rezoned. And this kind of brings up an interesting thing is that we see a lot in these rezoning. And it's this acronym called NIMBY, which is
like
not
a doll.
Not in my backyard.
Okay.
So what this is when folks who live in that neighborhood do not want to have new development, and specifically they don't want to have new and additional apartment buildings come up in their neighborhood. And so it's this acronym is NIMBY, is not in my backyard. People know that they don't want people to be homeless.
Yeah.
People realize that we have an affordability issue, but they don't want an apartment building being built right next to them, right? And so these guys that are doing this office are facing some backlash from residents in the neighborhood saying, wait, we don't want more apartment buildings. We don't want more traffic. And then there's also another acronym called BANANA.
See, they make them sound so cute.
Yeah, it is. You like the sound of it.
I like the sound of it, but when you get into it, it doesn't sound so nice.
So BANANA is build absolutely nothing anywhere near anything.
Yeah, no, that's not going to work.
So
no.
This has happened in California for decades, where these wealthy folks in wealthy California neighborhoods did not want multifamily anywhere near them. And we've seen what's happened in California. To their benefit, their property values have gone up because it's always supply and demand. There's not enough supply to meet the demand. It's driven up the cost of housing. But now they're there and they're doing fine because they own a house, but there's no new housing available. And so the cost of housing is so much. California is passing some legislation at the state level that is requiring cities and townships to require them to allow multifamily to be built. And we'll see how it plays out there. But we also see that here in Arizona, where you get pushback from people who live in that neighborhood, and it's very short-sighted. I get it. I get how some people, they don't want things to change, but that will prevent these projects from moving forward.
So do you know, what do they do when they're trying to kind of convince an area or people that this is a good idea? We got to make room for this. This is going to benefit your area.
Ultimately it comes down to the city council makes a decision. Even they'll weigh in on what the neighborhood is saying, what the people in the neighborhood are saying. But the city council can say, hey, look, we need this for the greater good of the city, even if there's a bunch of objections. And then the city council can always get voted out if they are voting against what people want. So ultimately, the people in the neighborhood, they need to come around to having some of these projects be developed.
We can all be a better neighbor. Room.
And specifically places that are more core, more central, more urban, like Phoenix, that has transportation infrastructure. We are the areas that can take on more of this dense population. We're not trying to go out and build a tower in the middle of McCormick Ranch in Scottsdale, or in the middle of some subdivision that's way out in the suburbs. Although those areas also need to become more dense, a majority of that will take place and should take place in the urban city areas. As we've seen in Phoenix, we do have good projects coming up. City council has approved a lot of them, but it's just something that you always deal with. These NIMBYs and bananas.
NIMBYs and bananas.
So the last item that we want to talk about when it comes to investing in apartment buildings is what's happening with interest rates, and specifically with inflation, because those two things are tied. And it's interesting. The Fed chief Jay Powell gave some comments on Friday in Jackson Hole, Wyoming, at this meeting they do every year, the symposium that they do every year in Jackson Hole, Wyoming. This was an hour from where I grew up, so I love that. But they go there every year. I was wondering why they go to Jackson Hole every year. And as it turns out, Volcker, who was one of the Fed chiefs in the early 80s, he wanted to go there to fish. And they said, well, we need to do a symposium and have a meeting. And he said, let's meet in Jackson Hole, and because he likes to fly fish. And now they've been doing it every year ever since. So, and that was 40 years ago. So that's why they go to Jackson Hole. And
I'm just trying to figure out how to make
area.
this work for me in my job. Like, is there anything I need to go to Paris for? Also,
you have to be creative.
Yeah, I will figure this out. Weird.
So basically, in this thing, Powell said that the Fed is going to continue to be aggressive and assertive about bringing down inflation by raising interest rates, and that there's no hesitancy from them. And just from these comments alone, the market tanked, because a lot of folks in the market were hoping that the Fed would start to back off from their stance. And from my perspective, This is exactly what needs to happen to cool the market down. We've already seen the cooling happening in our housing market, but if we go back even 4 or 5 months ago, it was crazy town when it came to buying a home, when it came to finding a home that you could afford, and there was this increase in the price of everything, right? And
Yes.
and that was not
And
sustainable.
panic buying and just a lot of uncertainty. So this is the kind of article, anytime they talk about these kind of things, that I kind of read with one eye closed, just because I don't know, is this scary or not? And this, what I liked about him, this in general, is that he very confident, and we're going to stay the course, and it's going to be all right. This is what's necessary. We're thinking long term, and I found that really reassuring. When I would also, my natural instinct would be to panic a little bit and go hoard like toilet paper and bread.
And that is, this is what has needed to happen. I was excited to see that there wasn't a divergence in the message from the Fed. You're never excited to see pain, but he said there's going to be pain from households, there's going to be pain from businesses, because we're slowing this ship down. It needs to be slowed down. Inflation is bad for everybody, especially people at the low end of the market, at the low end of the economic pool. So that is priority one. So it isn't a bad thing. And, we'll see what happens in the next Fed meeting. I think it's in about a month, 6 weeks. And it's likely they'll increase rates again at a 0.5 to 3/4 point. And the market will react to that. So in Phoenix specifically, we've seen some pullback in the demand for housing and in the transactions and the price people will pay. This is what we needed to see. Zillow did a report, and we saw a 2.8% decrease in between June and July in the price of homes here. Now, some of that in Phoenix happens because of the summer.
Yes. People change their mind a little bit.
The summer months are tough
Yes.
in Phoenix. June, July, August, a lot of people go away.
Yeah.
Similar to if you live in the Northwest or further north where it gets really cold in winter, things just slow down. It's like the cold weather just kind of slows everything down. It slows people down. Yeah. In Phoenix, it's the opposite. The heat kind of keeps people away. So we saw a decrease of 2.8% in Phoenix in the price of homes. That's a good thing. And then Phoenix area homeowners typically pay a mortgage of $1,613, and that is 76% higher than what folks paid only 3 years ago in 2019 for their mortgages. So mortgages have gone up almost 100%, 75%. That is why we needed to do this, is because that increase was just not sustainable. Inventory, which is something you want to look at, and that's a really good indicator of what's happening with the market. We needed the inventory to increase, and that increased 11% from June to July. Phoenix was the second highest decrease from June to July. I think some of that has to do with the summer months, but we also saw some of the biggest increases across the country. So the other markets that also saw a decrease were Portland, that saw a 2% decrease, Denver, Riverside, California, Raleigh, North Carolina, San Diego, Sacramento, Austin, Texas, and then the biggest one, number one, was San Jose, California, which saw a 4.5% decrease. So this is doing what it's supposed to. And one other point here is that the Zillow report said the typical home in Phoenix is now a $470,000 home, and the typical rent in Phoenix is $1,921, which is slightly less than the national cost to rent a home of $2,031. So this is to rent a home in Phoenix. And as we already talked about, there's that gap, about $1,000 gap between buying a home and renting a home in Phoenix for the equivalent. And so we needed to slow things down when it came to purchasing a home. We needed to make it more affordable for folks. And but there is going to be some pain, and that's one of the things that Powell talked about that really drove the markets to go down.
But paying for in the short term for a long term benefit, which I can always get on board for. Like I can always feel good about the long term goal, the long term gratification.
There are some people who aren't used to any pain in the last 10 years because things just kept going up and up and up. And pain is a part of life. It's a part of the world we live in, and certainly a part of investing. So I agree with you. Pain sometimes has to happen.